Ladies and gentlemen, may I have your attention please again? I know there are some good talkings are going on and we don't want to have that too long because I hate that by myself. But I think it's always a pleasure and big honor to have such leading people of the mining industry on a panel discussion. But we want to make that also a little bit more on the easy side, I would call it, so we don't getting too serious. So first of all, let me bring up to the stage Rob McEwen from McEwen Mining, Chairman, President and Chief Owner. Rob, you sit here.
Thank you.
Thank you. Please. The red wine is there. All good. So, then we move on with Osisko Gold Royalties. Sean Roosen, who is Chairman, President of Osisko. Sean, please have a seat here. Hi.
I brought my own.
Hey, and I make sure next time we get bigger chairs, yeah, because there's nothing for us. So
it's my stunt double.
So, okay, and our third company for the first time here, Steppe Gold and Matthew Woods, Executive Chairman and CEO. Matthew, please have a seat here. So, all right, make yourself comfortable and then let's get started. Oh, that's really comfortable.
That is broad.
Perfect. So you guys have all a bit wine? Great. I need to talk a bit more. Yeah, then let's get started, ladies and gentlemen. And I already said some things about McEwen Mining, but please get me a little bit more precise on the introduction of the company. And McEwen Mining is, I would call it a real speciality in the mining business, because Rob McEwen is owning 24% of the company, and he has invested $133 million of his own money in the company. That's a big commitment, I would say. But what is even more surprising, and that's not quite normal in the mining industry, his salary per annum is $1. I don't know how you make the living out of it, but you look great. And
I don't spend very much in places.
Yeah, super. And the company has liquid assets of $60 million, no debt. This is always lovely to have, and pays a dividend. As I remind you, we love that. They have no royalties, no streaming, nor they do any hedging. And for 2018, they plan to produce 185,000 ounces of gold equivalent. And of course, they want to grow that in the following years. Then we will move on with Osisko Gold Royalties and Sean Roosen, whom, well, I'm sure everybody knows Sean in this room. And after the acquisition of the Orion Mine Finance, which I think was an absolutely genius deal in the royalty space, you have created one of the world's largest and also leading royalty portfolios. And you have now 131 assets under management, I would call it, not dollars, assets. And 16 of them are generating cash flow. How do you oversee 131 assets? That's crazy. But for 2018, you expect around 100,000 gold ounces equivalent production, and you will bring this up until 2023 to approximately 140,000 gold equivalent ounces, maybe more. The focus lies on precious metals, of course, but you find in the well-diversified portfolio also copper and diamonds, and the main focus is still North America, but you are over the world diversified, of course. And you also pay a quarterly dividend. We like that too. And of course, through your company development, I hope there's room for a higher dividend in the future. Then let's come to Steppe Gold, which I said already, the next gold producer out of Mongolia or from Mongolia. Matthew Wood was the co-founder and executive chairman of the Mongolian Hunu Coal Limited, which was sold for $500 million to Banpu in 2011. Mongolia is, of course, very open for investment, and the company is on the Government Gold 2 program, which aims to double Mongolia's annual gold production by 2020. That's only 3 years from here, ladies and gentlemen. The Mungo the Mungo Gold and Silver Discovery is located immediately northeast of the current resource on the ATO project. A 20,000 meter drill program is underway, and Steppe Gold is attractively valued, of course, relative to advanced stage gold companies. And gold production should start in Q4 2018, hopefully. Yep. So then let's get started with the panel here. I think now everybody is really aware who you are and what's going on. And Rob, I would like to start with you first. And I think the theme of the evening was like how you create shareholder value, how your companies are well run, and how shareholders also benefit. So let's start. Rob, your title is Chief Owner of McEwen Mining, of course. I said that, but can you tell us a bit more about this big commitment and also your unique setup you have?
All right. I started off in the investment industry, spent 18 years there, and then stepped into the mining industry and built a company called Gold Corp. And all of our shareholders did very well, and today it's one of the biggest gold mining companies in the world. After 19 years running it, I decided, well, I achieved more than I set out to do. And I thought, well, let's see if we can do it again. So I started buying into a number of junior companies. I buy 10 to 30% of the companies. And over time, I merged two of those companies, US Gold and McEwen, and Minera Andes, to form McEwen Mining in 2012. I wanted to take the model a little further. In Gold Corp, I was the largest individual shareholder, and we had compound annual growth of our share price in excess of 31% for the last 13 years that I ran the company. So everybody was quite happy, but I thought I wanted to get it even closer to the shareholders. So I said, I'm going to make a large capital investment in the company. I'm not going to take a salary, and I'm going to be very much like an investment banker in line with all of my shareholders, so that if the price of the stock goes up, we all have a smile on our face. If the price goes down, I feel the pain as much as my fellow share owners do. And I think that's really important in today's market, because we seem to have forgotten it in the industry that there's too much coming off to management before the share owners are getting it. I think there's a lot to share, and if you develop a company and let it grow, you can all benefit from it. But at the moment, there's too much take at a management level and not enough patience for building that value. I also think a return, we pay a small dividend. At Gold Corp, I started with paying once a year, then quarterly, then we went monthly. And I think a dividend is a form of rent that you pay your share owners while they're waiting for the capital gains to occur. I also believe that the mining industry can deliver some very pleasant surprises. We haven't found all the gold deposits in the world. And if you go out and you can buy assets at a discount, assets that are out of favor, and you can see opportunities either to improve the operating margins or see something in exploration that other people aren't seeing, you can create value. You do not create value like the seniors have tried to, where they go out and have expensive acquisitions that keep diluting the shareholders. And we saw with the big ones like Barrick, Newmont, and a number of others, where their strategy was just to get bigger for the sake of getting bigger. You only want to get bigger if your share price goes higher. If it doesn't go higher, then you shouldn't get bigger.
Yeah, that's right, absolutely. And also with the dividend, you remind your shareholders that you are only still alive, but you are doing a great job because you reward them. And that's the same with Sean also. I mean, you're also paying the dividend, but the dividends, despite growth, you did a great deal when you bought the Orion Mine Finance Group, the portfolio there, the royalty portfolio. I mean, it was a $1.125 billion deal. Maybe can you walk us a little bit through, as you have enlarged your cash flow assets more than 3 times, and what it probably means for the group then?
Certainly, you know, we're very fortunate. We benefit from the success we had in Osisko 1, which a lot of members in this room benefited from. We found the Canadian Malartic mine, and we built it, and we sold it for $4.1 billion, having invested about $1 billion. So we returned about $3 billion to shareholders, some of you in this room today. And the return on that investment was 4,105% over a 12-year period. So we know what success looks like. We know how it works. With the Osisko Gold Royalties, we started this company, an IPO, at the sale of Osisko 1 in June 2014. We've grown the company from a IPO market cap of $500 million to the current $2.5 billion. We pay a 1% to 1.5% dividend based on the fact that we have cash flow and we have cash flowing assets. And we were able to take the shareholders from Osisko 1 and reward them with a royalty and streaming company that we created that took advantage of our skill set, which is to find, develop mines and to create value for shareholders in a pretty constant way. So we've been able to channel exploration success into production and into cash flow in I believe what is a fairly unique way in terms of being able to transition with the largest spinco that's been created that had cash flow. So we're quite proud of that fact, and I think if you look forward to it, we've returned, as of today, we approved our dividend policy, $54 million in dividends in 3 years. As a company that's only 3 years old, I believe it's one of the few companies that's paid a dividend in the first year of existence. So we are big believers in giving shareholders payment. We want you guys to be with us, but we also want you to invest what we do best, which is to find and unlock value through the drill bit, through discovery, and through the passion of mining that we think we bring to the table, where we look at assets that maybe other people didn't recognize, and we try and unlock that value for our shareholders. The classic being, we bought Canadian Malartic for $88,888 in 2003. Barrick sold it for $1 that same year, and my shareholders made $3 billion on it. So that's what we do, and that's what we want to do again. That's what we're focused on now.
And I'm pretty sure you will. Yeah, then Matthew, let's come to your lovely company. I mean, you are not new in the business, of course, but you are doing the IPO now. Can you maybe get us a bit more an idea about your upcoming IPO?
Yeah, so we're planning the IPO now. So we've lodged our initial prospectus on the TSX main board. That's going very well. We're soft marketing now, and try to get the company up and trading by the end of the year. Purely on Mongolian assets. We're a Mongolian-focused company, purely on precious metals, and we're doing what both of these esteemed gentlemen are talking about, is creating real value by going to a part of the world which not a whole lot of people know a lot about, where there's immense opportunity to discover truly large gold deposits. And we're already on to one of those, and we've got a number of other properties in the company.
And where will you be listed? I mean, it's not a Mongolian exchange for sure.
Look, we're going to list on the Toronto Exchange to begin with, and then I'd say this time next year we'll dual list on the Mongolian Exchange as well, as we bring in more acquisitions.
Fantastic, great. Yeah, then Rob, we come back to you again, and thanks for the short answer. Rob, you just recently closed the acquisition of the Black Fox complex in the Timmins camp in Ontario in Canada. How much does this exciting addition contribute to your existing production then?
We're quite excited about Black Fox. It's located in the Timmins district of Ontario, Canada, which is the largest gold-producing district in the country. It's an asset that we purchased from a company that had purchased it 3 years earlier. They had paid $300 million to buy it. They assumed $140 million worth of debt along with that purchase. They put in $120 million in CapEx and exploration. We bought, so over $500 million was spent on the property. We bought it for $35 million. We paid $27.5 million in cash, $7.5 million in assumed liabilities, and it came with $150 million in tax pools that we'll use to defer future income. The property is producing about 50,000 ounces of gold, or will this year. Next year it's probably 40,000. It has a reasonably good resource base, but a short reserve life. They haven't spent money defining the areas they're going to mine. It gave us a production facility, or a processing facility. Earlier in the spring, we bought other properties in Timmins, and we were wondering, where would we process it? Would we do some custom milling with another company? When we bought Black Fox, it came with a processing plant with excess capacity, so we could process the ores that we bought in the spring at that plant, get additional production, new exploration targets, have about 18 miles or 18 kilometers along a very important prolific gold trend, and it created our third base of production in the company.
Fantastic. Sean, you raised another almost 300 million Canadian dollars. What can we expect in the follow from that?
Well, we've always tried to walk softly and carry a big balance sheet. Our strategy has always been to be opportunistic in down cycle markets and when the sector is out of favor, and we've been able to deploy capital at the right times. As you stated earlier, we bought the Orion package this summer for $1.125 billion. We had about $450 million of cash on our balance sheet at that point in time, so we're now reloaded. We're one of the biggest cash balances in the space. You know, in complement to our Orion portfolio, which represented 70 assets and added almost double the cash flow to get us close to $200 million by 2023 and diversify ourselves. We also run what we call the accelerator model, which represents the companies that we've incubated, like Barkerville Gold and Falco Resources, and most importantly, Osisko Mining, which have been companies that bought assets that were out of favor, added capital management, and hopefully get the right result. In the case of Osisko Mining, we took that company from a $10 million market cap to $800 million market cap in 24 months. So more of what we do, and about 25% of our investment has been in the accelerator model, and 75% has been in the traditional royalty and streaming model, where we try to keep our cash flow in check with our balance sheet and make sure that we deploy capital into higher return, business plans such as single asset development companies, not unlike what we see with my friend here in Mongolia, to be early to the rise and early to the game and to really sponsor that wealth creation at the drill bit. So we'll do more of that, and we'll continue to add to our existing more conservative portfolio.
So you're always in a comfortable position to snap on when you see it.
We like to play the game, but I don't like to wake up in the morning and worry about where my debt is.
Okay, super. Yeah, Matthew, what makes an investment in Mongolia now so attractive, despite that you are going into production, definitely?
Yeah, look, in the precious metal space, Mongolia is very interesting. Everyone's heard about these big copper deposits, and they get talked about probably too much. And if you look at the big mineralized porphyry belts in the world, there's big epithermal gold deposits there as well. And that hasn't been seen in Mongolia yet. Certainly there's a number of big copper deposits there, but the big 5 million ounce, 10 million ounce deposits haven't been found in Mongolia, and that's not because they aren't there. The province we're in the Onongraben, just north of there, you cross the Russian border, and they're there. There's giant deposits there. There's 5 million ounce deposits. There's a 60 million ounce deposit. You go across into Mongolia, and suddenly they're not there, and they're not there because nobody's looked for them. Everyone and all the money, and the bulk of the money in Mongolia has gone into the exploration for either coal deposits, which I've done myself there, and copper deposits. So I think it's a real opportunity, and not very much money has been spent on that. And just about Mongolia in general, I mean, a lot of people ask me, what's it like to work in Mongolia? How do you work there? I've been there for 10 years myself. I'm a resident of the country. My wife's Mongolian. It's a very generous country. It's been extremely kind to me. The new government was voted in 2016. They're pro-business, pro-development, pro-foreign investment. A new president was elected this year. He's a self-made entrepreneur, very successful guy. And these are people that want to develop their country. It's a very large landmass. It's 1.6 million square kilometres. There's only 3 million people in the country. So you don't have to create much wealth in the country to enrich all the people in the country. And about doing things in Mongolia. So in 2009, I went to Mongolia and I put some assets together with my business partner, George Tumor, who's in the audience and the ambassador to Singapore, Philippines and Brunei. And we listed that company in Australia on the ASX in the beginning of 2010. It was IPO of the year, all sectors. We raised $20 million. And we acquired some assets by about July of that year. We made a new discovery, which was the Suntal coal deposit. And we drilled 100, 200,000 metres very quickly. We had 11 rigs on site. And we had that mine fully permitted, owner-operator, and going within 12 months of discovery. And there's just not many places in the world where you can go to a country, peg fantastic projects, peg large areas, and then when you find something, you can build it in 12 months. And that's the good thing about Mongolia.
That's really fast, yeah. So that means also with the permitting and everything, this is really running fast through,
yeah,
but it's running. Look,
there's a new mining legislation that's recently come in. They're going to start granting new licenses soon. And the country's working. The country's working, and they're really making an effort to seek out foreign investment. It's very important for them.
Great. Yeah, perfect. It's always good to be in a good shaped country, honestly. Rob, tell us a bit more about your Los Azules project in Argentina, which has very robust economics, of course. Is it strategic for you? Of course, I think so. And how does this add to your future production pipeline and will transform the company in the future going forward?
As you talked about earlier, Jochen, the electric car is going to have a big impact on copper deposits. We have a deposit in Argentina that we recently put out an updated preliminary economic assessment that has a property that it's projected to produce, when in production, 415 million pounds of copper a year at a cost of $1.14 pound, with 29.5 million pounds of copper, some gold, 5.5 million ounces of gold, and 190 million ounces of silver. So if you allow me the moment to do a little bit of alchemy and convert that copper to gold, as to what, just to give you a sense of the relative size, 415 million pounds of copper a year. Copper right now, the exchange rate between gold and copper, there's about 408 pounds of copper equal to 1 ounce of gold. So dividing that 408 into 115 million pounds of copper gives you slightly more than a million ounces of gold a year. At $1.14 a pound, you multiply that by the 408, and you have a cost of under $500 an ounce. You look at the resources, and right now they're indicated and inferred, so they need more drilling before the confidence level is as large. But if you were to take that and divide it by that 408, you would have a 78 million ounce deposit that would be running for more than 36 years. Now, it's copper, it's not gold, but it is, I go through that exercise to show the relative size. There are not many gold mines that run that long. There are not many projects in the mining industry like that. So, at the moment, we're hoping to push this project forward to a point that we can make an application for construction at the end of 18, the beginning of 19. We are looking, our balance sheet, it needs about $2.4 billion to build it. It would take, at $3 copper, it's projected to pay back in 3.6 years, because there's a high-grade component that we would mine. But, and it would be at $1.14, the first 13 years, it would be in the bottom quartile of the cost curve of all the copper producers today. And looking over the life of mine, it would be in the bottom half of the cost curve. So it is strategic. It probably adds a little bit of confusion to our story because I've been around gold and silver all my career. But I can warm up to gold and copper here. But we have been looking at joint venture situations on that to take it to the next step.
Fantastic. Sean, you are the fourth largest royalty company now in the sector. I mean, you are excellent in the royalties, but you also have something what you call the accelerator model. And maybe you can give us a bit more insight into this accelerator model, how it works, because I think this is, of course, we are all here for business, and that's quite normal, but I think your model is something providing good companies or good projects a chance to really move forward, because with a technical team you have the money you have in place, and finally you are helping the companies and the mining industry.
Well, I think when we look back at our history and how we made our shareholders money in the past, we're sticking to the story. In the case of our history, you know, we had a brownfield model that we believed in, and we thought that there was a geological mistake had been made on the interpretation of a deposit. We went and exploited that, and our shareholders made $3 billion. We took that stock from 20 cents to $16 and then split it down, and then ended up being sold for $8.40. So we're about the here and now. We want shareholders to make money every day and each day, not just at some future milestone. So the royalty portfolio gives us the here and now. And then, you know, the future stuff is where we're going into what we think are stories where we understand and we bring something different to the table in terms of our scientific and geological prowess, in terms of being able to interpret something that maybe somebody else didn't see. And that's what the accelerator companies are about. Barkerville Gold, Falco, and Windfall Lake, which is Osisko Mining, had a collective market cap 3 years ago of $50 million. Today, the last time I checked, it was about an hour ago, it was $1.2 billion, the collective value of those companies. So when we talk about the accelerator, that is it. Osisko Gold Royalties has come in, provided both equity, taken a royalty and streaming opportunity to set the stage for project financing, and provided both the capital markets wherewithal, the technical team, and the ability to access and bring with us other shareholders to execute advanced programs. Within our accelerator companies this year, we will be the largest explorer in the world, with 870,000 meters of drilling executed by the companies that we created in the world, with Windfall Lake in northern Quebec leading the charge at over 400,000 meters, drilling at 40,000 meters a month. So we are not on our laurels. We're creating wealth at the drill bit, which I believe is the only way that you really create it. The rest of it's a de-risking sort of process where you go through feasibility and into mine construction and exploitation. So we're sticking to the stuff that we know how to do, the things that we're known for, and the things that we have the technical team that's been together forever and a day. Some of us have been together for 17 years, and this is what we do. So it's the same old band playing the hit tunes that we know, coming to a theater near you. So that's what we do, and we're pretty good at it, and we're stuck mostly to Canadian assets. We have about 15-20% exposure international, but the Canadian scene is where we've been the most successful, so we play our home theater as often as we can.
You do, absolutely. Well, Matthew, what is your strategy in the future, meaning the bigger picture, as you have put together a whole pipeline of projects, of course, which include different stages? I mean, you will start quite small, but the target is to raise the production tenfold, I would call it.
Yeah, so we're busily drilling holes now. We've got 3 drilling rigs on site. 67,000 metres have been drilled on the property in the past. We've started a 20,000 metre program on a brand new, sort of like Sean was discussing, a brand new structural interp of our own. The first hole we drilled on the property was the best hole ever drilled on the property, over 67,000 metres. So we're having some real wins there, particularly on a new discovery zone. We've also commenced construction on our first mine. That'll be producing, we'll be mining that in March, crushing in April, and we'll be producing our first gold in August and nameplate by November. So it's a small mine, it's getting the company going. It's going to produce about 40,000 ounces a year, cash costs of about $350 an ounce. But that's not really the story of the company. The story is, one, the ore body that sits underneath that and the fresh rock, and that's increasingly looking like it'll be a plus 3 million ounce ore body, and we're getting some wonderful results on that. Mm-hmm. And then the idea in Mongolia as a whole, and I discussed that a little bit before, is to build a pipeline of projects where there's visibility to 10 million ounces. And we think, you can build 10 million ounces in Mongolia today with the right backing. And certainly with a production profile of 500,000 ounces a year. So that's a longer term objective of where the company's trying to go, and that's a real company.
Mm-hmm, great. What time frame do you see to say, let's go from 40,000 to 400,000?
Yeah, look, the last company we built in Mongolia, we built it much quicker than we hoped. We took it from 20 million IPO to a $500 million takeover in 18 months. I think this is going to take a little bit longer. Yes. I think within 3 years, I'd like to be, 5 to 10 million ounces, and I think we've got some great ideas in the company. We're very well connected in country, and I think we can see those assets already, and we'll be putting those together.
Yeah, fantastic, great. Rob, let's move a little bit away from the mining in hyphens here. You and your wife donated more than $50 million to research in stem cell and regenerative medicine and to education developing leadership. How does this relate to the gold mine? Is it that just you are giving something back here?
The mining industry is very good. Mother Nature is very kind. And you can generate quite a bit of wealth doing it. But there's far greater value in taking that wealth and doing something that can create a benefit that will benefit a much larger audience, like the world. And in 2006, we started a research center in Toronto, in the largest research hospital in the country, for regenerative medicine and stem cell research. And for me, it was very gratifying because I think of my life and I'm running down a hallway and there's a doorway at the end of the hall that I'm trying to go through. And when we opened this center, all of a sudden some doors appeared along the wall that weren't there before. And going through the door, you met all these very intelligent people that are working very hard to keep us all healthy. I happen to believe that our hospital system isn't going to grow fast enough to deal with the retirement of the baby boom, that there's going to have to be some rationalization of healthcare. Regenerative medicine holds out the promise of profound change and improvement in healthcare. We give out a prize annually of $100,000 US, and we started that about 7 years ago for innovation in stem cell research. And the first recipient of it was a Japanese researcher who was able to take a skin cell and reprogram it into what they call an IPS cell. It's an induced pluripotent cell. It's like a stem cell. And from there, it jumped over the ethical issues about sourcing stem cells. Well, we gave him his prize, and 2 years later, he won the Nobel Prize for the same work. And it was an inspiration to both my wife and I in saying, there's a much bigger purpose in life than just making money. There's a purpose out there that you can benefit a large number of people. And so when I look at building McEwen Mining, it's not to sit on a pile of gold bars. It's to share it with the research community and try to have more Nobel Prize winners. In December of last year, Bayer AG of Germany, the large pharmaceutical company, made a decision to look at commercializing what's going on in regenerative medicine. They went around the world looking at the top research labs in the world, and the first place they stopped was our center. And they established a business in Toronto. They're investing $225 million in regenerative medicine. We're not putting it all in our center, but they came to our researchers that are taking, they're creating heart cells, and for people who've had a heart attack, they're injecting 1 billion stem cells into the area where the heart attack occurred. They haven't done it on any people yet. They've done it on small primates and pigs are very close to us. They don't look like us, but the hearts are similar. And in the next 2 years, they're going to be doing human trials. And if they've already shown that they can take the scar tissue and with the injection of the stem cells, turn it into muscle tissue, turn it back to the way it used to be. And that means that pacemakers, heart transplants, artificial hearts could be a thing of the past with this discovery. And to me, that is extremely meaningful and something that I want to continue supporting.
Fantastic, yeah. Chapeau, chapeau. Very well done. Perfect.
Thank you.
Thank you. Sean, to what extent you think you can build your portfolio up? I mean, 131 assets by now. What can you handle? What is the maximum? And also, will you raise your dividends in the future for the benefit of your shareholders? And you guys are also by yourself large shareholders.
Well, let me just first start by saying that, I'm a few years younger than Rob, but I applaud his philanthropical efforts. He's done a great job and is a great Canadian, contributed greatly to the outcome of not only Canadians, but also to the mining industry. So I applaud you, Rob.
Thank you.
And we'll try and follow with you. And on the second note, I'd like to know who your tailor is, because I'm going to need some of those green pants next year.
I will get you some.
When I grow up, I want to be the combination of these two guys. Back to the other part about making money for the shareholders. 130 assets is not that hard to manage for us. The reality of that asset package is 16 of them are cash flowing. Another 20 or so are under development, which is very much within our world. And the other ones are in exploration development stories where, we're trying to be a catalyst and a conduit to get further exploration drilling to make those projects transition from exploration ideas to development projects, something like Casino, which is a large porphyry gold system in the Yukon, which we think is a deposit of the future, but it's a $4 billion capex, so it's probably not getting built in the here and now. But our shareholders benefit from the fact that we've already established a royalty on that company at a very low cost, and that we think that we can be a catalyst to maybe in the future in the right environment to do that. And it also provides us the ability to look at organic growth within the assets we already own, because we need to deploy capital as a royalty and streaming company into cash flowing assets. Owning a royalty on a mine that does not come to production has no value to my shareholders. So we want to own things that we think are going to make the next transition. We want to be part of the future of the mining industry, where we have a growth profile, but we want to be rational in the here and now. We want you to own our stock today because you're making money with us today, but we've planned for the future, and we have a low cost of entry to projects that are going to be important to you and your grandchildren as you invest with us. So it's a well-balanced approach. I think it's an approach that we need to do. And one of the things that we've tried to do is be a continuous voice in geological and geoscience advancement, where we provide a stable environment for the science of mining and exploration to continue on. We have over 130 geologists working for us across the Osisko platform as we speak today, which I believe makes us one of the biggest employers of geoscientists in the world. And we just want to keep that value creation, that culture, and provide a really stable organic platform for growth. We are not the smartest guys in the world when it comes to capital markets. We are pretty good at exploration development, and we think that we've given you a business model where you can choose a la carte through the accelerator companies, or you can participate in the mothership, Osisko Gold Royalties, and we own about $500 million of equities within our companies. So it's not a separate business. We put our money where our mouth is, and we march forward, and we maintain a big presence in the advancement of exploration development, where we think that we can add some value, and we provide maybe a bit of a unique angle for investors to participate in our science. So.
Absolutely, great. Matthew, Mongolia. You are bordering to China, of course, and that leads to me to the question, what is, let's say, how do you see longer term the influence of China on Mongolia on the one hand, and maybe on your business? Because I could imagine China would love to get the gold you produce, of course, for the market price. And as we all know, China is sucking up the gold in the world. I mean, here from the Zurich airport, I think we have every day we have a plane going to China, delivering to the Shanghai Exchange and also to Hong Kong, etc. So what's your feeling, your thoughts on that?
Look, certainly Chinese inbound investment into Mongolia is very important to the country. It's probably over 60% of total investment. And it's increasing as well. Over the last 20 years, it's gone from nothing to being the major investor in country. The other major investor is, of course, Russia, and that's largely a legacy investment. But what's, I think, most important, and the Mongolians would agree with me, is what they term their third neighbour policy. So the countries on the northern border is Russia, and on the southern border is China. And their third neighbour is people like us, right? Canadian investment into Mongolia, Korean investment into Mongolia, US investment into Mongolia, Australian investment into Mongolia. And I think that's very important for the country as a whole, not to rely upon purely Chinese or Russian investment. On it. And they're working towards that, and that's why the ambassador's here today. That's why the Minister for Mines turns up at PDAC and is standing there in our booth and helping us promote our company. And you don't see that a lot. And that's because that third neighbour investment is so strong, so important for the country. I think the Chinese are there. They're buying all the resources they can, and that's very important for Mongolia, particularly from a copper perspective. Plenty of other commodities. Our gold, we'll sell our gold to the Mongolian Central Bank, and it'll probably end up in Switzerland after that.
All right, great, perfect. Then thank you very much, Rob, Sean, and Matthew.
Thank you, Jochen.
Thank you.
I would say those are really three companies and three gentlemen which have created a lot of shareholder value in the past, and also they will do in the future. And as far as I know, now the Q&A, you are waving the microphone already. So Patrick, please, where are some questions? There's one guy. Pascal, of course.
So yeah, before the show, the French connection asked me about peak gold production. And I believe in it because I can see all the challenges in exploration and development. And others say, oh, the world can produce 5,000 tons of gold a year. It's just a matter of price. But what's your view also regarding to China, which is the biggest producer nation, but now maybe on the shrinking path? What do you think about that?
Okay, who wants to start? You want to start directly on China? Matthew?
Look, Chinese have been the largest gold producer. All of their mines, not just gold, coal, iron ore production, they are decreasing, and they're going to, and that's why they're actively acquiring assets everywhere in the world, and they'd certainly love to acquire a lot more assets in Mongolia as well.
Peak gold?
Well, I think that we've seen overall grade in mining deposits has dropped significantly around the world. We've seen mine life reserves reduced. And I guess my fundamental belief in gold and a lot of other commodities is that, as the middle class and expectation goes up around the world, I don't believe that any Chinese man is going to be able to get married without a gold ring and a real diamond, not a synthetic one. So I think that that's a fundamental lock-in for consumables as we look forward. And I don't see anybody in India getting away from the gold market. So I think we have a real gold market, sustainable for a long time. We're not going to change tradition or belief systems anytime soon. We have a lot of blockchain currency and a lot of fervor around that. But at the end of the day, one scandal or one technological mistake in that business, and we will drive it back in tradition. But I would bet anybody in this room, whatever it costs, that no Chinese person ever offers their future bride a ring that is not made of real gold with a real diamond in it.
All authentic. Mining of gold, annual production adds just over 1% to the global supply. We've seen the capital markets being quite unsupportive of the mining industry since about 2012. We've seen little bursts in 15, 16, and a bit of 17. But we've also seen, capital hasn't been available other than Sean and the royalty companies and the streaming companies. But you've also seen regulations have become more and more extended. They're not as favorable as Mongolia, where you can get a permit in 1 year. It's more likely in the United States it's been up to 8 to 10 years to get a permit. Canada, it's similar. Some parts in South America, you might get it built, but then someone takes it away from you. So there isn't a big expansion of gold. I'm seeing the world produce 5,000 tons of gold would really be exceptional. That would take a huge price to get that much gold produced, I think, and you wouldn't see that in 10 or 15 years. That's right now we're doing about 3,000 ounces a year. I mean, to get to 5, it's not going to happen in the near term. So that'll put price pressures on gold and silver and move it to much higher levels before you see that type of addition. And even if it did, if it went to 5, you're still just probably under 2% of the annual production, or of the global store of gold. Mm-hmm. So.
Next question. I don't see it. Don't be so shy. No questions. Okay. You're all hungry, huh? Looks like.
Maybe we get a show of hands. How many people think gold's going to $2,000 in the next 3 years? Just put up your hands. How many think it's going to $5,000 in the next 4 years?
Depending on politics.
Not many hands. I have a hand up. How about $10,000 in the next 6 years? 12? All right. There are numbers like that out there. Ray Dalio, who runs the largest hedge fund in the world, came out recently and said that you should have 5 to 10% of your portfolio in gold. And you might say, what might cause gold to get excited? Well, there are a few things you can cite. Maybe Catalonia leaving Spain. Maybe the price of oil now up to $64 a barrel because they're doing some investigations in Saudi Arabia. Perhaps you have something happening over in the peninsula in Asia. There are a number of causes, or maybe you just see some of the major municipalities in the US going bankrupt. Massachusetts, Indiana, California, they're just lining up. We have low interest rates. Government debt has, as Jochen said, he showed those pictures. I thought those were great pictures of what does $1 trillion look like? What does $20 trillion look like? That's just the United States. Start thinking of all the major countries in the world. They've all played this game of quantitative easing. And if interest rates happen to move, and they have no ability to service that debt, and you look at zero interest rates are going to kill insurance companies, pension plans, because all their actuarial tables are thrown out the window because they'll be paying out capital. They won't be generating sufficient income. There is plenty of reasons to be thinking and not being complacent that the central bankers control the game. They will not be able to keep the rates where they are. We're seeing, as I look around Zurich, there are cranes all over the city. If I look around London, there are cranes all over the city. Toronto, every major city in the world is covered in cranes. That means there's going to be a shortage of material. There's going to be wage push coming. And it would, I think, behoove all of you, if you don't have some exposure to gold, to get some, even if it's 1%. I happen to be on the far end of the extreme. About 90% of my money is in gold. But
how come that on? But I have maybe also a question on you guys, and maybe Sean, you are somebody who can answer that quite well. We saw since 2010, we saw $85 billion write-offs from the large mining companies in the world. I think they generated something like $138 billion in revenues, but on the same time, they invested $110 billion. Not quite a positive balance, right?
Well, I think that, the write-offs that happen in the space are part of the cycle that we see both in not only in the mineral sector, but also in the oil and gas sector. But if we look at other sectors that haven't had one lately, the tech sector had huge write-downs in 2000 with no particular tangibles. So the sunk capital that went into those projects will be the foundation and the basis for the next boom and the next set of mines that become equitable investments for you as shareholders. So I think that it is part of the biosphere. You should understand and know that is part of the risk in the space, but it's also where you can make benefit. We've created $9 billion worth of companies in the Osisko group, and the majority of that wealth has come from brownfield developments where money had been lost or fortunes had not worked out, or somebody didn't have enough money to maintain that one option where markets have the ability to be irrational for an awful long time, even to the point where sometimes you don't have the ability to be solvent. That doesn't mean the idea or the asset was wrong. It just meant that the market was irrational longer than you can afford. So we like to be the exploiters of that, and we like to take advantage of that. And I think that as we go through the cycle, yes, there will be write-offs, there will be projects that don't work, but at the end of the day, back to Rob's point, and we got Rick Rule in the crowd tonight, who I think that we all agree on one thing: you need to invest in these things, and the true form of dilution is bankruptcy, which is what we're trying to avoid. And staying within core assets that are tangible is really the way to secure your fortune. So if we get wiped out by a currency devaluation, which I've been through 3 of, one was in Ivory Coast when they devalued the CFA in 1994 by 50%. We had some investments in Zimbabwe, which everybody's got a nice $400-500 trillion note. And most recently in Cyprus, when they decided just to take all the money that was over $100,000. This is the here and now. This is not sort of something that happened to your grandfather. It's happening right now. So, when we look around at these things, we think that the assets remain the same, and a good asset will take as much bad management and as much bad market as you can throw at it and still be a good asset. And good assets always end up being worth money at some point.
That's right,
Jochen,
absolutely.
if I can just add to that, what happened in the gold industry, I think, is happening in the real estate industry and the stock market today. The gold industry, price of gold went up, the price of capital was down, they borrowed lots of money, and management never figured that the metal price was going to fall, and it fell precipitously. Today, we have all sorts of money going into real estate with very low-cost loans available, and we have lots of people running into the broad market, and it's gone up. When those prices drop, there'll be people sitting there with debt that they can't service, and they're going to have to liquidate. And the same thing, the write-offs that we saw in the gold market are going to happen in the broad market and in the real estate market. And this has happened. It's a cyclical business, and if you don't look at history, you're in peril right now.
Fantastic.
I don't know when it's going to happen, but it's certainly feeling that way.
Okay.
I'll just add one more comment to that. If you take an ounce of gold and you bought it a year ago, it's worth pretty much what you bought it for. If you bought an iPhone a year ago, that iPhone is worth almost nothing.
Yeah. Especially when you drop it.
So you have to buy a new one.
I have one yeah,
you're talking, the big leaders in investment right now are companies that don't produce any sustainable tangibility. Last year's iPhone is not worth anything to Apple. They need to sell you a new one. So I think there's a bridge in the belief system right now that will come to reality when we get back to tangibles.
Absolutely. I have one last question for you, Matthew, because with you I have to play the China card a little bit more, as you are living in Mongolia and so close to China. To me, it seems like China is like an octopus and a hoover of resources. What is your view longer term on that? Can they sustain this? Will they suck up all the resources in the world for the future?
Well, I think they're certainly trying to, and they're becoming more aggressive, and they're understanding international business and dealing with other cultures better. And I think more and more they're going to acquire more assets overseas. The Mongolians themselves are very protective of that. They don't want their country bought up by the Chinese. So they've made it a little bit difficult for them in many regards. But I think that they're a natural force. There's a lot of people. Mongolia's got 3 million people, and China's got well north of 1 billion south of the border. It's an very interesting dynamic in regards to resources. Mongolia's an extremely resource-rich nation.
Absolutely. Less people, lots of country. All right. Any more questions from the audience? Do I see any hands?
When's dinner?
There's one. Patrick?
Yeah, question for Matt Wood. I've had a front row seat at watching him prepare for an IPO over the last couple of weeks and getting muzzled by the lawyers in Toronto in the IPO system. There's some great things going on. Maybe, Matt, just tell us the real story of what you've got going on at Mungu and Unam Kundi. That, we're in Switzerland, it's a real democracy. You can get these things out in the open.
The lawyers don't let me say anything anymore.
I'm sure Rob and Sean are sympathetic to.
Well, look, that's one of the. We talk about increasing gold price. One of the things, why the gold price is increasing, why there's going to be less gold, is because the exploration industry as a whole. And I worked as a gold exploration geologist for 15 years, and I think we were doing more exploration drilling when gold was $300 than we're doing now at $1,300. And I think the exploration sector as a whole has really suffered over the last decade. Brownfields, a lot of people are looking at brownfields projects now because simply new deposits aren't being found because the dollars aren't there to find those deposits. Certainly we've got the expertise, and there's a lot of smart people out there that can find these things, but it's very difficult to seek financing. Ourselves, we've been very lucky. We've got fantastic support from our founding shareholders. We've got some great names behind the company. So we've been able to get funds. We've made some great acquisitions. We're going to make a number of other great acquisitions. We've got 3 rigs on site, and we're not even listed yet. We're building our first mine, and we're fully funded. We're going for it. But you are reliant upon that funding. We're a small company. You need that funding. Without that funding, then there's no drilling, which means there's no new deposits found.
Great. More questions? Nope, there's one more. Yes?
Hello. It's a general question about the Chinese and the Russians. I think it's a fairly open secret that they are understating their mining and their output and their storage of gold. No one really knows what the true numbers are. But I was just wondering, is there an event that one can reasonably foresee where the numbers actually come out into the open? So maybe it's US dollars as a reserve currency falling below 50%. Maybe it's cryptocurrency taking a bigger share of the world, quote-unquote, currency volumes. Is there any single event that you can see where this sort of open secret comes into the open?
Yeah, I think there's one that John Hathaway at Tocqueville had brought up as a challenge, and maybe some of the people in the room could help us out. But I think if we were to go on to the LME and buy 500,000 ounces of gold and ask for physical delivery, that would precipitate everything you're talking about. I think that everybody would have to report everything, and the emperor's clothing would be off as to how much everybody's lying about everything if we could just take physical delivery of a large sum of gold with one group. That's John Hathaway's sort of vision on the world, and I just pass it on in the best way that I can communicate his words. But I think that would be a very good catalyst to making sure that everybody saw what was really going on. My personal...
There are some belief that Russia and China are working to dislodge the US dollar as the reserve currency of the world. And they've been building their gold assets so that they will have a currency that's backed by gold. If you go back to when the US dollar was made the reserve currency of the world in 1944 in the Bretton Woods Agreement, it was the European nations that insisted that the dollar be backed by gold before they would allow it to be the reserve currency. That link was broken in 1971 when President Nixon closed the gold window. So we've been operating in a world where there are currencies that have no backing. I believe that China and Russia, and there may be others in the world, the Middle East was working on it for a while, but I don't think it's serious. The Russian ruble doesn't have as broad a circulation and is anywhere close to the dollar, but the Chinese currency has a chance of doing that. And when they would disclose their gold reserves is when they're going to say they're doing a lot of currency or purchases of oil and other commodities in their own currencies. And when they come out with it at a point when they can seriously challenge the dollar as being the reserve currency, they're going to say, that's a currency with no backing, and we have this behind us, and we have a more solid currency. That's when you'll see it come out. And that could be, in the next couple of years.
You want to add something?
Yeah, I entirely agree with what Rob's saying. I think that's exactly the game that's going on. The Chinese are trying to back their currency with gold. Not 100%, but it'll be proportionally backed. And that's how, I believe that myself. It's exactly what they're up to. Yeah.
Yeah, what I can also add maybe to that, there are very strong information and rumors about China with the futures exchange in China that they want to set up by December already a future on oil, which is backed by gold and payable in yuan. That's the dilemma what Saudi Arabia has today. And that could be one of the real big trigger points where the whole game is changing. Yeah, because by now it's all paper bullshit, I have to say that, yeah, which is holding us down still. And as you said, with the physical delivery, that's exactly the point, because the LME storages, they are dry, they are empty. Yeah. Some more? Done? Okay. Then I would say we start with the main course. Rob, Sean, Matthew, thank you very much again for your time and your explanations. Hope you enjoyed it. Okay, thank you.